Good afternoon, traders. It's 4:07. Market just closed. Right now, I'm looking at the E-mini S&P 500 futures, and they close in about 8 minutes. We're trading at 13.14 now, 28 points. This is a day/swing trader's paradise. Whenever you see this many contracts traded in the market, I mean, the average volume is 1.6 million contracts a day. We've already traded over 3 million. So right now, I'm going to give you a plan A and B for tomorrow, since nobody knows whether we're going to go up or down. If you had to ask me, I think that 1303 is definitely a realistic number, and if we hold below our plan B tomorrow, then we're definitely going to be headed down here. So let me tell you what plan A starting off with. That's a bullish case scenario. The last time we had a sell-off like this was on, the exact date was the 28th of January, and I'll show you on the daily chart real quick. Okay, right here, you see that sell-off? Well, the next day it was followed by us going below the prior day's low before they snapped it right back up, and that caused this extra leg up. But we didn't have a lot of bad news here. This was all the Egypt protests, which really didn't have any confluence with our markets. But right now we have oil, gold, dollar. People were buying into the dollar short term, and also you have bond fluctuations. But in the longer term picture, let me switch to the US dollar real quick. We are bearish on the dollar, period. End of story. You know, that's basically how little thought I had to give to that. Dollar's going down, and there's nothing that's going to save it. They're only going to be printing out more and more money, so that causes dollar devaluation. We've already seen crises along the road, the same road we're going down with the dollar. I mean, you saw Japan's in a never-ending recession, and it's sad that I'm laughing about this, but these people in office, these politicians, if that's what you want to call them, if you look up the definition of a politician, it's someone that serves the people, and these people serve the government agenda of the elitist, of the global conglomerates. It's not about the people anymore. But I'm afraid, as the dollar continues to go down and gold, silver, and crude oil continue to rise, even the average person who doesn't have a lot of education on the stock market are going to notice, hey, you know, gas prices are at $4 a gallon. I can't even go out and buy a loaf of bread without spending $5 anymore. They're going to notice that, and that's when they're going to stand up. My prediction is there will be some kind of revolt in the U.S. in the next year and a half, caused by rising food prices and massive inflation. And you know, usually, just like when the tech bubble came, everyone was talking about, hey, did you see this stock? Even people that didn't know about the stock market were trying to get involved. Well, right now, people that don't know about the stock market are talking about silver, and they think it's the next thing to rise. And actually, silver is probably a safe bet right here. Even though it had a massive uprun over the weekend session, it still has a lot of demand in there, meaning that JP Morgan has a massive short float. I think that $50 for silver is definitely reasonable, and I continue to remain bullish on this. I give it an overweight. But going back to the equity markets, the ES again, we're just now at the 20-day moving average. Sorry, I had to zoom in out a little bit. I believe it's around 13. All right, it's 13.55. That's the exact number that the 20-day moving average is. So the question is, if we do get below that, we're heading straight to 1300, and that's where my 1303 level comes into play, along with a couple formulated numbers. That's how I get that. No matter what, this is going to be a critical area between 1300 and 1303. You already know 1300 is a psychological number, and we pay close attention to these. Above 1300 we remain bullish, below of course we're bearish. And if we do remain bearish, I really think that the 1284 number will be tagged, and that's right around where the 50 moving average is on the daily chart. A lot of people are coming on TV calling for a I think it was a 10% decline in the S&P, but I think that even if we got back down to the 50, that would be healthy. I mean, we've just gone straight up. I wouldn't like to see just a drop quickly to the 50. I'd like to see a little bit of consolidation, something to look like this. Maybe get a little buying in there, put in a little lower high, come down, lower low, just not a straight drop, because that's unhealthy. That scares the average investor out of the markets, and that's when you get suckered out of it, and that's when the big players come in and start buying it in. So they take you on the down move, they buy your shares, and then they run it back up. So I'll keep you notified, guys. I'm going to start getting in the video every single day again. I've been really busy lately, sorry about that. Tomorrow morning in pre-market I'm going to try to do a video, because there's going to be a lot of activity in the European session. So I'll update you guys. Have a great day, and I'll talk to you tomorrow.